Hello and welcome back to ABG Investor Day. My name is Adrian Galani. I'm an equity research analyst here at ABG within the cap goods sector. Up next, we have a presentation with Sintercast, and with me today, I am joined by Steve Dawson, the CEO at Sintercast. So I will leave it up to you, Steve, for your presentation.
Okay, Adrian, thank you. This is the fourth time that Sintercast is presented at the ABG event in the last 3 years, so I think that most people are familiar with us. But let me begin with a short reminder of who we are. If I can have the next slide, please. So Sintercast is the industry leader for a new type of iron called compacted graphite iron. We don't actually make the castings ourselves. We provide the process control technology to enable the foundry to produce CGI in a reliable and cost-effective way. Our technology provides for more efficient manufacturing, so we save energy. And compacted graphite iron is stronger, so the engines are smaller and lighter and more fuel efficient. So again, we save energy and CO2, and I'll come back to that toward the end of the presentation. Our first series production began in 1999. It was a low volume program for Audi, and we had our real breakthrough in 2003 when our first high volume series production program started, and that was for Ford. We had our first full year profit in 2006. Unfortunately, we went back below zero during the 2008-9 economic crisis, but we returned to profitability in 2010, and we've been giving a dividend since then. Over that 11-year period, we've returned almost 208 million to our shareholders, and we have a very aggressive dividend strategy. We're a profitable company, and our goal is to funnel most of our profit back to the shareholders. And over that same 11-year period, we have returned 108% of our operating result. And let's go to the next slide, please. So if we look at our current production, and here I've chosen to show the production since 2007 so that you can see our growth trend. And we have quite a positive growth. If you do the math from 2007 until today, we have a compounded annual growth rate of 14%. And during that time, there are also some dips. You can see the economic crisis in 2009, and again with COVID just last year, but overall a very positive growth. And I want to talk a little bit about how Sintercast grows. So we don't need the economy to grow. We don't need the automotive industry to grow. And we just need for new CGI engines to be approved and to start production. And you can see that happening from 2009 through 2011, new programs coming on stream. Again, in 2018-19, we had a high volume program for Cummins starting. And in total now, we have more than 60 programs in series production. And if I put it in perspective, each time we get one medium to large series production program, we increase our volume by about 10%. And that's set to happen again next year when we have the start of production of a new Scania 13-liter engine that's now been introduced to the market. And we also have the start of production of a new 16-liter engine with FAW, First Automobile Works, in China. So we look forward to another really positive growth next year. Before we move on, let's tackle two other hot topics with the benefit of this graph. And the first one is COVID, of course, and you can see that we were affected by COVID in 2020, like everyone. But I think even if COVID isn't entirely finished, I think it's largely behind us. We understand it better now. Vaccines are in place in most countries, and our customers, both the OEMs and the foundries, have established social distance, working routines, and protective equipment. So I don't think that there's an appetite at all to go back to closures. The other hot topic that we can discuss with this graph is semiconductors. And you've heard a lot about semiconductors over the last year. Indeed, the semiconductor shortage has clearly affected the automotive industry. Therefore, it has affected Sintercast. It continues to affect the industry, and it will well into next year, probably into the middle of the year and perhaps beyond. I would estimate that if the semiconductors were under normal circumstances now, that our volume would be at least 10% higher. But there's also good news with the semiconductor crisis. Generally in the industry, people regard the third quarter as the low point. So already things are starting to get better and will continue to improve. And like with COVID, workarounds have been developed. So OEMs have stopped offering options like heated seats and heated steering wheels. Maybe there's still cruise control, but not adaptive cruise control. And the semiconductors that were needed for those functions are being applied to core functions of the vehicle so they can build cars and sell them. And so if we combine it all together, there's been rather low production in our industry for the last 2 years, first because of COVID and then because of semiconductors. That means that the demand is quite high. The supply side continues to be a little bit low. Looking at dealer lots, I won't say that they're empty, but they're clearly understocked. So we have to increase the production, and we have to increase it to meet the current demand. We have to increase it to rebuild the stock levels. And on top of that, we have these new programs with Scania and FAW starting next year. So we're currently running, as you can see in the graph, at about 3.2 million units per year. And we expect to reach 4 million units during next year. If I can have the next slide, please. So I'd like to go into more detail about our current production. And we're active with passenger vehicles, and you can see that we make cars, and in that category, I'll include SUVs and crossovers. We also make full-size pickups here in North America, and we make Super Duty pickups. And if we can animate one forward, please. And this shows the breakdown of our production. So it's only 6% for cars, and you see that we're really heavily leaning toward the larger segments of the passenger vehicle industry. Next animation, please. We're also active in commercial vehicles, and this is 40% of our current production. And one more, please. And also what we call industrial power. So this is the off-road industry, like construction, agriculture, marine, and rail, and that makes up about 5% of our total production. Let's go forward again, please. So what I want to do with that previous slide is to look at how the market might develop over the next 10 years, particularly with consideration for the current discussion about electrification in our industry. But before I do that, I want to look at the actual production to set a foundation for that discussion. And this chart shows actual vehicle sales, passenger vehicle sales in Europe over the last 4 years. And what we see is that petrol engines are decreasing slightly. They're still about 40% of the market. Diesel engines are also decreasing. They're over 20% of the market. Most of the decrease has been for small vehicles that have difficulty to tolerate the on-cost for the exhaust after-treatment systems. But for us in the larger side, the luxury vehicles and the SUVs, the production has been quite stable. Hybrids are increasing. And then we see plug-in hybrids and battery electric vehicles just below 10%. What it means is that more than 90% of the passenger vehicles currently sold in Europe have an internal combustion engine. Let's go to the next slide. Here we see the same thing for the United States, and we see this dominance of the gasoline engine, still around 90%. Nothing else is above 5% of the market. Hybrid and diesel are more or less equal today at about 4.5%. And what this means is that in North America, more than 95% of the more than 95% of the vehicles sold this year still have an internal combustion engine. The question isn't really what happened over the last 4 years, but rather what will happen in the next 10 years. So let's look at the next slide. And this is a forecast compiled by Deloitte and IHS, so two of the better known forecasters in the automotive industry. And they show the likely growth trend for different sectors in the world. And out in 2030, at the far right side, we can see that Europe may get to around 40% electrification in 2030. Here in North America, be something between 25 and 30%. But what it means is that in 2030, still more than 50% of the vehicles will have an internal combustion engine. And let's put that in perspective. So today, Sintercast has 5% of the passenger vehicle market in North America. And I think that's a fantastic achievement for a 32-person company based in Katrineholm, Sweden. If the market should go to 50% electrification, that would mean that we have 10% of the addressable market. Yeah, there's still a very large market to grow into, huge market opportunity ahead. If I can have the next slide, please. Let's do the same thing now for commercial vehicles. We can look at the current sales in both Europe and the US, and this is actual statistics thus far in 2021. And you see this dominance of diesel. There's a little bit of natural gas engines as well, but they use the same engine technology as diesel fuel. For Sintercast, it's still the same components. So if you look at the breakdown, it is less than 1% of all of the other technologies. And again, we should look forward rather than backward. I don't have a forecast for that. I'm going to address that later in the presentation. But what we know is that it will clearly be slower than the passenger vehicle market. Let's go to the next slide. So again, we come back to our passenger vehicle production. And here we'll look at the likely development for electrification and for Sintercast over the next 10 years. So let's animate. So passenger cars, this will be the lead application for electrification. It's certainly where all of the focus is. And you will have heard at the COP26 conference a few weeks ago that there was a mandate for no more internal combustion engines after 2035. There isn't a consensus on that. Many countries signed up, but also several didn't. So for example, Germany and Japan didn't sign up. They both said that the internal combustion engine with low carbon fuels, either zero carbon or net zero or things like, for example, hydrogen, will give the same benefit at a much better economic value to society. We already have the infrastructure for manufacturing and also for distribution of the fuels. Let's animate ahead. And it's not just Japan and Germany that didn't sign up. Toyota, Nissan, Honda didn't sign up. In Japan, after the tsunami and the problems with the Fukushima nuclear reactor, all of the nuclear power plants have been closed. 70% of the energy in Japan is now produced from fossil fuels. And the president of Toyota said, the more electric vehicles we make, the more CO2 we make. In Germany, Volkswagen and BMW didn't sign up, and in Korea, Hyundai didn't sign up. So there's not at all a consensus on this, and it'll be fascinating to see how it evolves. For Sintercast, all of our engines in this sector are diesels. They're all 3-liter V6 diesels. And we accept that, as they say in the industry, these will sundown with the next emissions legislation, which is expected to come in 2027. So we will see a decay of that. It will be a gradual decay. And I think that's okay. It's only about 6% of our business. Let's go to the next one. So full-size pickups, they're also passenger vehicles. So they're a key target for electrification. But these pickups are all sold in North America, which will lag in terms of introduction of electrification. And there's a very different duty cycle. So we hear a lot about new pickups coming with electric powertrains. And I think that they will be popular. Everybody has to bring them in because pickups are the highest sector in North America. The top 3 best-selling vehicles in the US are all pickups. So it's a very concentrated and focused market segment. However, most of these vehicles are sold in rural areas, frequently used for towing, and when we're pulling something behind the vehicle, the battery range is still very unacceptable. So it's not at all clear how that will develop. Let's look at the Sintercast outlook. So our engine in this sector is a petrol engine. For the F-150, there are now 4 engine options. Our petrol engine is the smallest and the most efficient. So actually, it's being applied to new vehicles. So we're going to see new applications. I think that the outlook for us in this sector is that we'll be stable for the F-150 pickup and that we will be growing with new applications of our engine. If we move to the next sector, so this is now Super Duty. This is really a difficult application for electrification. The duty cycle is completely different. This is a work vehicle. It's used all day long out in the field, frequently for pulling things. It will really be the last of the passenger vehicles to come toward electrification. If we look at the Sintercast outlook, today, there are 3 Super Duty vehicles in North America for Ford and General Motors and Ram. Sintercast already has 100% of the Ford business and 100% of the Ram business. So the question remains, what will GM do? And will they come to CGI? If they come to CGI, will they come to a Sintercast foundry? But I see that our production is stable for Ford and Ram with a significant growth opportunity. And this is stable well beyond 2030. Let's animate to the next slide, please. We then look at commercial vehicles. Here, electrification is very much longer term. I think that we're still in a phase of development and evaluation of how to go forward with commercial vehicle powertrains. Will it be battery electric? Here we're speaking about the area where Sintercast is most active, which is the heavy-duty long haul. It's not at all clear in the industry that batteries will be successful in that application. Perhaps fuel cells in the long term, or indeed maybe the current engine using alternative fuels, so biofuels, low-carbon fuels, or hydrogen. For Sintercast, this is our strongest growth opportunity. Today, about half of the commercial vehicle manufacturers are using CGI. And if we look forward to the next generation, because of the increasing demand for performance and efficiency in the engine, virtually everyone is moving to CGI. So this is a strong growth opportunity for us. And also between today and 2030, the commercial vehicle market in Europe and in the US will both increase. And it's set to increase at a rate faster than alternative powertrains will come into the market. So we have a double growth opportunity. We have more OEMs changing to CGI for their next engine generation, and also the market becoming bigger. So a really positive growth for us. And we've said for a long time that commercial vehicles are our biggest growth opportunity, and that's certainly going to come true over the next 10 to 15 years. And we look finally at the last sector, which is the off-road. Yes. So again, this is longer term. There's a lot of development on engine efficiency and alternative fuels in this sector. We think of a farmer who goes out in the field and he wants to work all day long. Batteries simply won't be able to do that. You look at trains and they run for several days, and boats that run for several weeks. So this will continue to be an internal combustion engine, probably focusing on clean fuels. It's a growth opportunity for Sintercast, but it's a smaller sector. And what we can hope for is that as the core volumes in passenger vehicles and commercial vehicles increase, that this industrial power sector can continue to contribute about 5%. So let's look at the next one. Yeah, so before we wrap up, I'd like to talk a little bit about the environmental contribution. So iron is one of the most highly recycled materials in the world, and 90% of the materials that we use in the production of an engine casting are recycled. I mentioned earlier that our technology enables the foundry to produce CGI in a reliable way. And if we can reduce the scrap by 1%, and that means 1% less melted metal, we use typically electrical energy to melt the iron. So it means 1% less electricity and 1% less CO2. Compacted graphite iron is stronger, so we can make engines that are smaller and lighter. And compared to the normal iron, we're typically 10 to 15% lighter. So that means 10 to 15% less raw materials transported to the foundry, 10 to 15% less materials melted, so 10 to 15% less electricity, and 10 to 15% less CO2 emissions. Cast iron has a lower life cycle CO2 than aluminum. So aluminum is a very popular engine material because it's lighter than iron. And because it's lighter, it means that it uses less fuel during the life of the vehicle. But aluminum also has a very high energy intensity in the manufacturing phase. And it's very difficult to pay that back in terms of fuel saved during the life of the vehicle. For small engines and small cars, it's possible to pay it back. But in our sector, for these larger pickup trucks with the V engines, it certainly doesn't pay back, not in one vehicle lifetime, probably not in 3 vehicle lifetimes. So we have a lower CO2 life cycle footprint. And finally, downsizing, increasing the performance of the engine, increasing the efficiency of the engine, using less fuel. This applies for both cars and for commercial vehicles. And if we can animate, please. This is a snapshot from the US Department of Energy website. You may have seen it in our 2020 annual report, but it compares 4 of the 2020 engine options in F-150. And this is really important because F-150 is the most popular vehicle in North America. So it's a very high volume vehicle. And I'd like to compare in the second column our gasoline engine, the 2.7 liter V6, to the next 2 engines. There is a 5th engine option, which is even bigger. I haven't included it in this comparison. But what you can see in the fuel economy, we have 10.7 liters per 100 kilometers, and the next 2 engine options at 12.4 and 13.1. So we have about 25% less fuel consumption, and therefore about 25% less CO2 emissions. So in preparation for this presentation, I made a little calculation, and I just took reasonable values for each of these different contributions. And I estimate that in 2021, the Sintercast technology will contribute to the reduction of more than 800,000 tons of CO2 in our industry. So let's go to the last slide and wrap up. And we come back to our overall market outlook and our good growth trend. As I say, we have a very positive outlook for the next few years with semiconductors getting better, refilling the supply pipe, new programs coming on stream for Scania, FAW, and a few others that are coming as well. I believe that we will grow from our current level of 3.2 million units per year to 4 million during 2022. I think that we'll carry on and have double-digit growth as we have in the past to 5 million engine equivalents. We absolutely have the opportunity to grow beyond 5 million. And as we looked at the outlook, a lot of our programs very positive growth to 2030 and indeed beyond. So I think that we have a very positive 10 and 15-year future. And that will predominantly be building on the demand in the commercial vehicle sector. I said a long time ago, and I don't remember when I first said it, but perhaps even 10 years ago, I said that in the fullness of time, all commercial vehicle engines would use CGI. And that's now coming true, and we're going to benefit from that over the next 15 years. Thank you.
Okay. Thank you, Steve, for your presentation. That was very interesting. We have a couple minutes, so I have a few questions I'd like to ask. First of all, this target you've had for quite a while of 5 million engine equivalents, is it possible to give some sort of timeline as to when you believe this is a reachable goal?
Before, we have a 5-year planning horizon. That's our forecast window, and we expect to reach the 5 million engine equivalents within that 5-year window.
And also an interesting thing you mentioned on the electrification trend is it seems like for larger vehicles, electrification is farther away. There's been a lot of discussion about specifically fuel cell electric vehicles. What's your view on these types of vehicles? Do you see them taking large market shares anytime in the midterm, or is this a far-away thing?
So two answers. Yes, on commercial vehicles, I would break down two types of vehicles. So medium duty, which may be regional distribution. They maybe go back to a depot every night and can get recharged. So if you're thinking about engines that are kind of 6 to 9 liter, I think that they will have a chance to go toward electrification in the next 5 to 10 years. And it will go gradually. But that's not really where we're working. We're working in heavy duty long haul, and that certainly won't go. There will be a demand, a legislative demand in California and some other states that follow California, and also in Europe, to have reference vehicles on the road, and they'll get a lot of attention. But still, the vast majority, more than 90%, will remain diesel throughout this decade. Fuel cell, it's a very long haul for fuel cells. There's a lot of development, there's a lot of attention, but there isn't a lot of fuel cell in the production outlook, certainly not in the next decade. I think that longer term fuel cells can become interesting, but I would also say that that is well after 2035. So I wish them luck. Sintercast was in that position about 20 years ago where we were developing and trying to convince the market. It's a long haul, but I look at a lot of forecasts. There's a lot of attention on it, but I just don't see meaningful volumes of fuel cells in 2030, neither in 2035.
Okay. Well, with that being said, we have to be wrapping up, but I'd just like to thank you again for your presentation and for answering my questions. And I'll leave it up to you for some final remarks if you'd like to say anything before we wrap up.
No, I'm 100% happy with that. You know, it's a fact that there's a lot of attention on electrification. We don't make batteries, but we make a big contribution to big volumes of the vehicles that people drive every day.
Okay. Thank you.